Welcome back, everyone. Today is a big one, a powerful one, a controversial one. We are talking about Bitcoin, the future of finance. And the big question, should you start investing now?
Yes, Lucas, and I already know this episode is going to create reactions. Some people believe Bitcoin is the greatest financial revolution of our century. Others think it's a bubble, a scam, or simply too volatile.
But let's slow down. Before telling people to invest, before telling people to avoid it, we need to understand one thing. What is Bitcoin really?
Exactly. Bitcoin is not just digital money, it's a decentralized financial network. That means no central bank, no government printing it, no single authority controlling it.
And that is where everything changes. For the first time in history, you can store value digitally without asking permission from a bank.
That idea alone is revolutionary. Imagine living in a country where inflation destroys your currency. Imagine waking up and your money lost 30% of its value. That has happened many times in history.
And that's why people compare Bitcoin to digital gold. Because just like gold, it is scarce. There will only ever be 21 million Bitcoins.
Scarcity creates value. That's economic principle number one. When something is limited and demand increases, price rises.
And we've seen that historically. Bitcoin started at almost zero. Then it reached $1, then $100, then $1,000, then $20,000, then $30,000, then $69,000, and recently it crossed above $100,000.
That's not normal growth. That's exponential growth.
But wait, it didn't go up in a straight line.
No. Bitcoin is famous for its volatility. It crashes 50%, 60%, sometimes 80%, and then it recovers stronger.
Let's explain that cycle clearly. Bitcoin works in cycles linked to something called halving.
Yes, every 4 years, the reward miners receive for validating transactions is cut in half. That reduces the new supply entering the market.
Less supply, same or growing demand, price pressure upward.
After each halving, historically, Bitcoin entered a massive bull run, but after each bull run comes a brutal correction.
And that's where many beginners lose money. They buy when everyone is excited, when media talks about it, when your taxi driver talks about it. That's usually near the top.
And they panic sell during crashes.
So should someone start investing now?
The better question is, what is your strategy?
Let's talk strategy. There are generally two types of investors in Bitcoin: short-term traders and long-term holders.
Traders try to time the market. They buy low, sell high, but timing perfectly is almost impossible.
Even professionals fail.
Long-term holders, also called hodlers, buy and hold for years. They believe in the long-term adoption of Bitcoin.
Historically, long-term holders have been rewarded, but nothing is guaranteed.
Now, let's talk about risk. Bitcoin is volatile. If you invest money you need next month for rent, that's dangerous.
Bitcoin should not be your emergency fund.
Exactly. Many experts suggest investing only what you can afford to lose.
Let's also talk about adoption, because the future of finance depends on adoption.
10 years ago, Bitcoin was for tech geeks. Today, major institutions are involved. Big investment funds, public companies, even governments have shown interest.
And we now have Bitcoin ETFs approved in major financial markets. That makes it easier for traditional investors to gain exposure.
That's huge. That means Bitcoin is no longer underground.
But critics still say it has no intrinsic value.
Let's address that. What gives money value? Trust, scarcity, utility.
The US dollar is not backed by gold anymore. It's backed by trust in the US government.
Bitcoin is backed by mathematics, cryptography, decentralized consensus,
It's trust in code.
and in its network. The more people use it, the stronger it becomes.
Now let's explore another aspect: inflation.
Central banks print money to stimulate economies, but when too much money is printed, inflation increases.
And inflation erodes purchasing power,
Bitcoin's supply is fixed. That makes it deflationary in nature.
which means over time, if demand increases, purchasing power could increase.
But again, price swings are violent.
Let's talk psychology, because investing is more psychological than technical.
Fear and greed, those two emotions control markets.
When Bitcoin crashes, fear dominates. When it rises fast, greed dominates.
Successful investors manage emotions. They don't let panic dictate decisions.
So maybe the key message today is not start investing now blindly.
It's educate yourself first.
Learn how wallets work. Learn about private keys.
If you don't control your private keys, you don't control your Bitcoin.
That's why self-custody is important, but it also requires responsibility.
Lose your private key and your Bitcoin is gone forever.
No customer service to call.
That's freedom with responsibility.
Let's discuss long-term scenarios. What if Bitcoin becomes global digital reserve asset?
In that scenario, today's prices might look small.
But what if governments regulate it heavily?
Regulation could slow growth, but it could also legitimize it.
Some countries have banned it. Others have embraced it.
El Salvador adopted Bitcoin as legal tender.
That was historic.
But adoption at national scale is complex.
Energy consumption is another criticism.
Yes, Bitcoin mining uses electricity, but defenders argue much of it uses renewable or stranded energy.
The debate continues.
Let's simplify for our listeners. If you believe in decentralized finance, if you believe digital assets are part of the future, Bitcoin is central to that vision.
If you prefer stability, low volatility, predictable returns, Bitcoin may stress you.
It depends on personality and risk tolerance.
Now imagine a young person with a 10-year horizon.
They can tolerate volatility better than someone retiring next year.
Time reduces risk in many investments.
Historically, anyone who held Bitcoin for more than 4 years never lost money.
That's powerful data.
But past performance is not future guarantee.
Always remember that.
Let's talk diversification.
Yes, don't put 100% of your money in Bitcoin.
Smart investors diversify across assets. Bitcoin can be a percentage of your portfolio.
Some say 1% to 5%. Others say 10%. It depends.
The important part is risk management.
So should you start investing now?
Maybe start learning now. Maybe start small. Maybe use dollar cost averaging.
Buying regularly, regardless of price, reduces timing risk.
And reduces emotional stress.
This is not financial advice, it's education.
Finance is evolving. Digital currencies are part of that evolution.
Whether Bitcoin becomes dominant or not, it has already changed finance forever.
And that's why we say Bitcoin, future of finance.
The question mark is important.
Because the future is not written yet.
But innovation is unstoppable.
If you found value in this discussion,
Subscribe, share, and join us next time as we continue exploring digital wealth and financial freedom.
stay curious
Stay informed.
and invest wisely.